So hello everyone. Today's webinar, the central question we will explore in this webinar is: what is actually safer, tokenization or an entry in the land register? The answer is less technological than many people assume. So what ultimately determines security are the legal framework, the custody structure and transparency, and not the technology alone. So let's take a deeper dive. In the traditional model, the land register represents the direct ownership of a real estate. And whoever is registered in the land register legally owns the property. And if you take the land register and compare it to tokenization, there are many interesting things to talk about. And all that. This has been a proven system with high legal certainty for decades, or even more than 100 years. And with tokenization, however, the land register is not replaced. Investors do not acquire a direct ownership entry, but instead obtain economic rights through a legal structure. The token acts as a digital proof of participation, or a claim. The security, therefore, does not arise from blockchain instead of land register, but from the legal structure behind the investment. So when we talk about security, we must also talk about access. Let's compare the land register to the tokenization. And the land register offers a maximum legal protection, but it also comes with a high barrier to entry. The traditional real estate purchase requires substantial capital. So, for instance, in Austria, the average purchase price for flats in urban areas exceed 4,000 euros per square meter. In addition, there are the transaction costs for around 7 to 10%, including real estate transfer tax, land register fees, and notary costs. And this means that anyone who wants to be directly registered in the land register usually needs several €100,000 in equity, or if you want to buy a smaller flat, at least around €50,000. The land register is therefore stable, but of course, if you want to sell it fast, if you need some money, or if you just want to live somewhere else, it's relatively inflexible and, as I mentioned before, capital intensive. So let's compare this to tokenization. This is exactly where the tokenization kind of comes in, because you want to do it fast, easy transferable, and secure. And the property itself remains physically unchanged and continues to be registered in the land register. So that's where the ownership of the legal law outside from the blockchain is proven. But however, it's embedded into a structure and regulated participation layers. So investors can participate with smaller amounts, and that's why blockchain is so interesting, and receive digital shares that represent economic rights, but on the blockchain. So globally, this market is growing very, very fast. So industry analysts estimate that the volume of tokenized real-world assets could reach several $1 trillion by 2030. So this shows that tokenization is not a short-term trend, but a structural shift in financial markets. So also in addition to the traditional financial market, blockchain and tokenized real-world assets is a very, very interesting future vision of how we see real estate and the transfer between the ownerships, even in smaller shares. So let's also take a deeper look at the technology of blockchain and which blockchains are out there. And today we take a deeper look on the Avalanche blockchain. So the security of the network and the technology is a very important thing. And the underlying technology should be consistent and very robust. So networks as Avalanche are designed to process high transaction volumes at very low costs. That's also if you want to sell a little bit of your share and not 100,000 euros, but let's say 100 euro. It's of course very good that you have a low cost fees, or even if you want to distribute something like monthly payout. And Avalanche can handle thousands of these transactions per second, and that provides fast finality and operate through a decentralized validation mechanism. So that's why it's very safe. The transactions are traceable, tamper resistant, and transparently documented. But however, it is important to understand that blockchain increases efficiency and transparency. It does not replace the legal due diligence. The security results from combination of technology, regulation, and structure. And let's take a deeper look in the entry barrier. So this leads to the questions to compare the traditional real estate purchase with a blockchain kind of real estate purchase or share of a real estate. When buying property directly, the owner carries the full market risk, maintenance risk, and liquidity risk. And of course the financial risk, because for example, if someone invests 300,000 euro into a single property, the entire investment depends on location, rental demand, and market development of that specific property. So in tokenized models, risks are often distributed structurally and diversified. And investors can invest small amounts and diversify across multiple projects or even asset classes. As you can see here, you can invest in photovoltaic, but simultaneously also in office buildings, hospitality, and so on. So you diversify your investment. Even if you invest 300,000 euros, you wouldn't buy 10 real estates with 300,000. You will buy one real estate and concentrate the risk on exactly that. Yeah, and yeah, if the same amount of capital is allocated across several digital assets, the so-called concentration risk is significantly reduced. The overall real estate market risk still exists, of course, but is distributed more strategically over different asset classes and real estates. And this is exactly where the bridge to our approach begins. Because today we also take a deeper look at Rocksolid Estate. We are an Austrian real estate company that's tokenizing real world assets. And where we focus our investment is in the sector of real estate tokenization. Let's take a deeper look. We as a company of Rocksolid, we take a look at how we could invest, let's say 10,000 euro, in inflation protected real estate, and in combination to that, solar energy, and that fully regulated. Rocksolid has a capital market prospectus approved by the Austrian FMA. So that's why I mentioned the regulated part before, because that's the baseline. You need a security, but you also need the regulated background and a very good delivery of new and interesting properties. Let's take a look at different personas who would be interested in investing but couldn't because the entry barrier was high. Let's take a look at him. It's Stefan, 38. He had been saving for years to buy his first property, but then inflation hit and he needed more money for spending other stuff, but also try to go on vacation. And then the money was kind of less and he needed more because, of course, the prices increased over the years. That's also why real estate is a very good inflation protection if you have some. Or there's Anna, 29. She wanted her money to work for the future, not just sit in a savings account, and invest into future, into solar power and future ideas. The Rocksolid Estate AG combines all that in one token. So the ROC token represents all real estate Rocksolid owns. So with one ROC token, where the minimum investment is 100 euro, you can buy one ROC token for the price of 1 euro per ROC token. And in this ROC token, all real estate is combined. And that's a very big difference because the real estate Rocksolid owns is generating revenue from day one. So we don't have any development risks. The real estate is optimized and increasingly producing income over the next month and years. And what's also nice, because of that, we can also pay out on a monthly basis. So you will receive a payout every month in EURC. EURC is a euro-backed token. And the investor benefits are that we have fully developed real estate, as I mentioned, no development risks. And you as investor can vote on different decisions like which real estate should we buy? Should we focus more in the hospitality sector or office buildings? or should it be more sustainable investment direction like photovoltaic? With our partnerships to England Focus and our core team, we have a very good pipeline of really good real estates. And also the immediate return is a very important thing, because the real estate generates revenue from day one. We just optimize it. And of course, it's inflation protected. So if the real estate develops over time, also the token develops over time, because the token represents of the real estate value. And the energy initiative we are currently planning and going ahead right now is that we add additional income streams beyond the typical rental revenues that come from office buildings, hospitality, and so on. And that's also diversifying and strengthening the investors' returns and stability. The forward-thinking and sustainable approach is a very important part for us, because when we think of the next steps after that, we are providing affordable renewable energy network in our future plans. So it's on the one hand side with Rocksolid, it's a joint participation in local photovoltaic projects in Austria. So this will start in Austria and it also maybe go to other countries. And all Rock token investors have then access to discounted electricity tariffs, and that's a double benefit. On the one hand side, a financial return, because you receive a monthly payout because you're a Rock token owner, plus you get cheaper energy. And the long-term vision is to build a self-sustaining investor energy network. And also, if you take a deeper look on how Rocksolid generates revenue, we as Rocksolid distribute 80% of the profits and just keep 20%. And as you can see, the more real estate we have, the more we optimize the real estate in terms of digitalization, of implementing AI, and so on. And our cost structure is not increasing. In the amount of rental income. If we have more real estate and we put more digitalization inside, then the cost structure is not going up as high as the rental income. So the profit will increase and will create value over time. The more real estate, the better for everybody. Because we as Rocksolid, we also don't have any fixed fees. It's a profit share. If the company earns money, we also earn money. And then that's the best point for you as an investor. So it's a win-win for everybody. And also, because I mentioned diversification, the income that we generate is out of different asset classes: hospitality, industrial real estate, office real estate, photovoltaic. And with a very good real estate pipeline that we have, the risk is not only diversified, but also very interesting in terms of yield. Because as you can see here, we see different yield classes, but if we also buy real estate in combination with a bank loan, then we can scale it even higher. Because the process, how it works, we start with the investment via our broker, Jonathan Mars. It's working via an app where you verify yourself, do your KYC, and buy your first Rock token. Then the money gets invested into real estate. That generates revenue and income from day one. And then, of course, optimization could be a part. That's also when we ask you as an investor via the voting rights, should we reinvest our money that we earned from the real estate, or should we optimize our real estates, or should we distribute it as an extra payout, for instance? Because the monthly payouts are fixed. You will receive a payout every month. But you are part of the voting to say, okay, let's grow the real estates that diversify into more asset classes than before, or should we pay out more? So that's up to you. And of course, the Rock token and the value development, so you benefit long-term from the asset development of the company's real estates. And it's not just invest and wait what's happening, it's invest and co-decide where we invest. We ask you questions like, which property should we buy? Not that you have to deliver us the real estate. We as a company have a lot of real estates with a good pipeline, and we ask you, for instance, should invest in this photovoltaic, or should be a more interesting in that we focus more on hospitality, for instance. And it's also not only buying and selling real estate, it's also strategical and operational decisions. Like also something like, is it more a more future-focused investment? Should we focus a little more on the energy initiative, or should we optimize our own real estate? Yeah, and also if you take a look at the market opportunity in Europe alone, the serviceable market that we are planning to obtain within the next 24 months is around 15 to 25 million. And we can buy, of course, even more real estate with this, because this is the money where we buy real estate. But also if you scale it with a loan, via bank loan, then you can buy more real estates. But of course, the real estate that we buy generates revenue from day one to reduce the risk. And also the real estate that we buy generates more interest than you normally get from real estates out there that are on the free market. So that's why the network of ours is very important. And of course, when you take a look at the world, then tokenized real world assets will increase enormously, and also Rocksolid will profit from this serviceable market. But of course, regulated and blockchain ready sector in the European Union is interesting. And the value of global tangible assets that could be tokenized is an enormous market. And of course, a strong idea needs also a strong team. So that's why we are in the real estate sector, tokenization and fintech sector for many, many years. For instance, Christian from England Völkers and also our co-founder and chairman of supervisory board has the real estate pipeline in combination with Bernhard Wurdinger, our co-founder and COO, that's on the operational part in terms of real estate. My part, Sebastian Arnesieder, is talking to you guys and helping Rocksolid build a safe structure of investors, but also think of the future where we should invest and focus on. And also Georg and Leandra are a very important part of our company to ask you and answer all your questions and to build Rocksolid for the future. And also, not only the team is important, also partners are important. That's why we built Rocksolid with a lot of legal partners, but also our broker was very important for us that we are now here where we are now. And also Avalanche, a transition to the Avalanche network the last month was for us very important. And also the renewal of our capital market prospectus the last month was important to adapt the prospectus and make it sustainable for the future. Yeah, and if you're interested in Rocksolid, we are happy to see you as one of our investors. So scan the QR code, take a look at Rocksolid, a deeper dive. Also, after you sign up, you will get redirected to a page where you can download the Jonathan Mars app on the App Store and Google Play Store, do your KYC and buy your first Rock token. After that, you will get redirected to the Rocksolid investor portal where you can implement your Avalanche blockchain, receive your token and also receive your monthly payouts. The payouts that you receive, you can transfer it also in fiat money, so in euro, and transfer it to your bank account. I'm happy that you were part of today's webinar, and I'm looking forward to seeing you as an investor of Rocksolid very soon.